Samir Arora joins us. Samir, good morning. Thank you for joining us. What a comeback it's been for the markets. Like they say, bull markets always climb the wall of worry. That is exactly what has happened in the last 10-15 days.
And I agree, and I've been saying it for long. Actually, just to tell you that yesterday our mutual fund hit its highest NAV. So the market, we don't see it in our fund also. But in general, the issue was in October and this issue that what was this selling for? But whatever it could have been for, whether it was for China or US elections, that thing has a limit and that seems to be over. Or it could have been because of these changes in Indian this thing rules on futures and what stocks can be offered for collateral, whatever. It's over and we move on in life.
So where do we go from here now? I mean, soon do you think it will be all the budget stock, all the Trump talk again, or this market has corrected, the excesses are out, and now it's going to be like a good, clear, blue sky scenario?
No. There's no blue sky scenario because the results have not been very good. And even in the budget, the expectations now will be, I think, zero to non existent. So, therefore, we would say that in general, in a market, over time, you make 12-15%. Sometimes you make less, sometimes you make more. But in the end, it ends up in this range, not just because that is a historical number, but because that is more or less the corporate earnings grows for at least 70-80% of the market. You see, what happens is every year when we say, oh, the market earnings growth is say 18% or sometimes 9% or zero also, it is because of a handful of sectors, mostly these companies from commodities or oil and gas or Tata Motor, all of them which either make 2 billion or mostly lose 3 billion. And therefore they change the number of the aggregate. But if you look at broadly the companies in financial sector, in consumer sector, in IT sector, and some of these newer things, they all end up growing 12-15%. You can go on any of these websites and just randomly put 20 companies from Asian Paints to Pidilite and just say how much was the revenue growth for the last 10 years, 15 years. आप जो कर लो वो घूम फिर के आप देखना, they'll come out to 10, 12, 13, 14%. And therefore, plus minus that is the earnings growth. And therefore, the market moves in that direction. But it is not some like the last 1-2 years where you're going to make 20-25% return kind of thing. I don't think it will make that because the results have not been that good or even good to deserve that. But you can select and maybe get 15% in a year, 14 or 12%, something like that.
Sure. But
But it is still better than other things you can do with your money. And you are, of course, having the option in case it does better. And also, the world is in a sort of a sweet spot. And therefore, there was never an expectation that if the US market is up, that India will be down. That is why I was saying that if people are moving from India to US in terms of money, that because the US will do better, it may do better and we may underperform. And actually, we have massively underperformed this year. Uh, but we are not going to be negative.
sure. But Samir, how right were you about your call on private banks? And now finally the sleeping giant has woken up after a hiatus of about 3.5 years. You think banks is that island of safety where you can perhaps beat even the nifty returns?
Only in a few banks now, because that is why HDFC Bank and others are doing well, who have proven that they can handle this kind of stress in microfinance and personal lending and all that. And in some sense, whether it was done because they didn't have enough deposits or otherwise, but to control their lending. And the other guys have also shown how bad the sector otherwise is. Not the banking sector, but the lending sector to the, sort of microfinance equivalent. So in that sense, yes, the big three, four will do all well. We hope we buy them every day. Even yesterday, we bought for a new account, the same old banks, the big banks now, and everything else has been left now. Which say 6-9 months ago, we would have had 2-3 other banks. Now, even in our financial sector fund, I find we don't have any of these for the last 5-6 months. But the
Samir,
good thing is that this was all well telegraphed. Actually, if you see all the sectors that have done badly, all of it was known publicly. You didn't have to do deep research. For example, in the microfinance and all that, for how many months Reserve Bank of India first told Paytm, then they told these banks that don't lend, change, don't do this thing. So everything was known that you're overdoing it. Same thing was in consumer sector where all these guys were saying that now rural is doing better than urban, which basically means urban was not doing well. In all of these, broadly, it was known. In the auto sector, you knew that each and every global company had downgraded their forecast for this year. Each and every, not even one had increased. So if somebody thought we are in an island, that also. So all these things were broadly known.
Interesting. But Samir, other than that, where else have you been a buyer or at least have a bullish bias, other than private banks, that is? I mean, some
So
sectors
private
like
banks
IT
actually
also
we
have been
haven't.
unsurprisingly very well.
But private banks, we haven't really added in terms of percentage. It's just that for a new account, obviously, we buy proportionately. So where the real money has been made this year in new names is all the three platform, whatever you want to call these companies, are now four: Zomato, Swiggy, Paytm, and Policy Bazaar. All of them we have meaningful, and we bought them at the right time. And like Paytm was the most difficult because it fell, what I think 50-60%, and everybody sold. Not everybody, quite a few sold. We didn't sell, we added, and now we are up some 80-100% in that. So some of these platform type equivalent, or whatever you call these names, have been our big contributors this year.
Samir, the debate around IT now seems to be getting slightly more clear. The index is almost at a new all-time high. Most of the IT companies are saying worst is behind us, which means the business contraction is over. Where do you think this sector is headed, considering that the stocks are at an all-time high and the growth, even if I look at the best case scenario, could be 7 to 8% or 8 to 10%. So where does the sector fit in the overall
So,
scheme of things?
so actually, we like IT. We have liked it for the last 4-5 months on the basis that everywhere else you are still having negative short-term outlook, if not long-term outlook. And in IT, at least the commentary will be positive. Now, this 7-8% is looks low, but if first of all, that is pakka that it is 7-8%, and then you hope that in a year or two it becomes 12-15%, then you are okay with it. So on a relative basis, because after the budget and after the elections, we got negative on the PSU type names and these economically sensitive names, so that all these we sold, and then we didn't know what to buy, so we bought IT. And so it's not some massive return that you are expecting, but it might be better than equal to the market.
Okay, fair enough. Hi, Samir. Morning. Just also wanted to get in your take as to what you believe could be the outlook for some of these PSUs. And I'm talking across the board, be it defense, be it some of the PSU banks, and what your outlook is.
We now no longer have that big picture thesis on PSUs, because for a big picture thesis, you have to say one of the two things. Either these stocks are very cheap, which we didn't think, or we never bought, but say in 2021, somebody could have said. Or secondly, that there are massive structural changes happening in the way it's running. Somebody's being privatized. So we actually are running into the election thought that BPCL would be privatized. So it's two different games. Now, I think both of them don't exist. So it's like any other company, any other sector in that sense. So we own NTPC and we own State Bank of India, but beyond a point, we are not looking at it that we are owning a PSU stock. In between, when we were buying everything from HPCL, BPCL, Bharat Electronic, and actually a little bit that at least I own. I don't know about the India guys, but all of these were bought for two angles. One is, okay, something is happening, somebody's giving orders, and second, it's a PSU and it's very cheap and it's being re-rated or rediscovered. I think that part is over. So therefore, now I don't look at it as a theme that whether we are underweight or overweight, because those both macro things of A being very cheap and B somebody trying to change them structurally, whatever they have done is now normal going forward. That's what I mean.
Okay. Samir, so what could be the factor at play for 2025? For 2024, it was largely elections. It was largely FI flows. What do you think could be the playbook like for 2025?
I don't know that way. And actually in 24, if you say that the main theme was election and the main theme was FI flows, then both were negative and the market is positive. So therefore, what we mean is sometimes you may get the factor right, but what the outcome of that factor is to, because if somebody had said that the election results will not be as strong and B, that the FIs will sell in a month so much, or at least over the year be flat, you would have normally thought that's a negative. So I'm saying don't look at it like that. Big picture, the world is okay. The world markets don't look as if they are about to collapse. Our returns, as in the market returns for the last 3 years, for the Nifty is about 14%, which is more or less in line with its longer term history and more or less in line with normal earnings growth of this big group, plus minus. Even if you say, oh, it should have been 12%, not 14, okay, so it's overvalued by 8, 10%, whatever, who cares? It's not wildly off. And then, therefore, the game is that there are 500 companies in the index. You choose somewhere the visibility of growth is a little higher, little clearer right now, because in some sectors, the growth has become very low or negative. And it's that sorting within that 500 companies or 1,000 companies that we are doing. But we are not thinking that the tailwinds are so strong that you will make 20% type return. Therefore, if some stock looks like making 12, 14% also is not a bad thing, which is why these private sector banks, little bit of IT is okay. And then you get some kicker from buying these very high growth, where the growth looks sustainable, which is all these platform type, where for whatever reason, it looks like a 2-3 year growth, at least of 25, 30, 20% type, which is these days a good high growth to go for, but not for the whole portfolio, for maybe 20% of the portfolio.
I wonder what the outlook is when it comes to the overall liquidity situation, Samir. How is it that you have looked at the recent, spate, short maybe, but of the FII selling, and what you expect, will drive liquidity going forward? Will it be purely domestic retail sentiment?
So, I totally reject this thing that, oh, this market is liquidity driven. It's the Indian guy that previously we used to say foreigner is investing. The point is, at the end, liquidity follows fundamentals. If first look at a foreigner. A foreign investor over time has bought into India aggressively. As in, out of the last 20 odd years, there are only 4 calendar years in which their flows into India have been negative. So it is not normal for it to be negative. And when they choose it, you can keep calling it, oh, it's because of low interest rates in US, it is because of excess printing in the US. But in the end, that money could have come anywhere and it has chosen to come into India, or had chosen. So over time, I think that money will be there. The second thing I totally disagree with this world is, for example, one of these brokers or fund managers wrote a big note on how supply is coming and the supply total is $50 billion. That is absolute from basic zero. I mean, it's so wrong, because that supply will come if the market is doing well. If the domestic guys get SIP, it is not that there is no money in anybody's account like it used to be in terms of institutional guys 5 years ago, but you're going to have 40-50 billion of supply. That supply is there because you have the capability to handle that supply. Otherwise, it cannot work if the mutual funds don't have inflow. So these are all sort of recursive things to say independently. This market, how can it handle 50 billion of inflows? No, I'm sorry, 50 billion of supply or whatever. It will handle it because that supply will come if we can handle it. If the investment banker goes to the company and say that the mutual funds and the FIs are not willing to buy because they don't have money, it's over. The supply goes away. So these are all random things. That's what I'm saying. Don't look at it like that. Anyway, somebody buys, somebody sells is happening all the time. Big picture, FIIs normally buy. Big picture, the earnings growth of the Indian market is about 12-14%. Big picture, the returns for the last 3 years are 14-15%. Big picture, the returns for the last 20 years are 14-15%. So plus minus that will continue. Sometimes this sector will do well, sometimes that sector will do well. And that is where I get my confidence. It is neither too high to say that if earnings grow 14%, but your market will grow only 8 because the valuations are so high. Or neither is it the case that this is incredibly cheap market, therefore you will make much more than the earnings growth. Ghoom phir ke, my favorite word, mota mati. over time, over the next 1-2 years, you will make in this range.
Okay. So, Samir bhai, mota moti as we say, roughly, what should
Roughly,
we
that's a correct English.
roughly, अंदाजे से,
Approximately.
Approximately.
यहाँ से कितना पैसा बनेगा? If somebody is
That's
invested
what
in
I'm
Helios
saying.
mutual
कि
funds.
अगर एक साल में नहीं बनेगा तो दूसरे में बन जाएगा. But घूम फिर के you will make in this range.
But
And that is a good enough. That is a good enough number both for a foreign investor and for a domestic investor. It may be not a highest return that you have made in the past, but obviously that way the markets have done well for 4-5 years. So, but they have not done wild. These are not wild returns. For wild returns, you have to go back to the previous 2 bull runs. For example, for the 4 calendar years ending 2007, that means calendar year 4, 5, 6, and 7. The annualized return of the index was 40% of the 500 index. In the year 1999, my NAV of the Alliance Equity Fund went up 280%. So that is what I call a bull run. Making 14% per annum, हाय बहुत हो गया, कितना ज़्यादा हो गया? I don't think it is ज़्यादा. It is fair and normal and in line with history. That's why I don't feel it is too much.
Samir, we were hoping that you'll make it to the studio and you would have been down for Dua Lipa concert here in Mumbai.
No, Diwali this time I was not there, but I can come next time. I will come.
Not
Dua Lipa.
You know, by the way, when you guys
I
ask the
said
question,
Dua
your
Lipa,
first
I
few
didn't say
words are lost.
Diwali.
Your first few words are lost. I don't know what is the system.
Very
आपके
telling of
first
your
4-5
age.
word नहीं सुनाई देते, फिर एकदम ठीक हो जाती है voice.
Dua Lipa concert. I thought you
Dua
will be
Lipa.
here in Mumbai for Dua Lipa.
अच्छा, I thought Diwali.
Age is catching up, Samir.
No. Singapore, you must have already gone. Bombay is a lot of rush and tickets are expensive. Singapore is much easier. I remember friends who live there, they tell me Coldplay Singapore experience was a neater and a
Coldplay I
cleaner
went.
experience.
Not this time, previous time. I think it was 18 or
Yeah,
19.
Coldplay was much earlier in Singapore.
Yeah. So, I mean, folks who live in Singapore, got some friends and relatives there, they've already said, we are better off going to Singapore and Abu Dhabi for Coldplay rather than coming to India. That's what Samir bhai must have done, right?
No, I didn't go for this. Dua Lipa, I didn't know Bombay mein hai. But anyway.
Okay, Samir bhai,
Next time.
this I'm hoping you'll be able to hear clearly. I'll be slow. What is one multi-bagger idea from Samir Arora? ये तो सुना होगा. Clear आवाज आ गई. Now you can
ये
answer.
मैंने सुना है, but मैंने आपको पहले दिए ideas, लेकिन अब मुझे लग रहा है बहुत बढ़ गए हैं, but I still hold them. I told you. I think I told you in my previous meeting, or maybe you can see in our letter there.
Yeah.
Basically, we felt that the 4 platform guys are all going to do very well. But multi-bagger is a strong word because they've all done well. But I think there is a shortage of high growth stocks and sectors right now. So, everybody will want some part in that because the high growth is visible and explainable and justifiable or projectable for at least 2-3 years or whatever trends. And therefore, because the rest of the economy is not growing and giving you stock opportunities which are growing at 15-20%, तो आपको जो 20% type high growth, visible growth नजर आएगी, you will want to have some part, all funds and foreign funds. And so I think those will do well.
Okay,
Right now, there's
Samir.
no negative trigger in the short term other than just an overall market correction, which I think is not a big deal.
Yeah, absolutely not. In a peak bull market also, you've got to have the stomach to take in even bull market corrections, which can be pretty scary and steep as well. But Samir, by the way, Zomato got Dua Lipa to Mumbai, just FYI. So you're betting it right. Okay, but good chatting with you. We'll let you go on that note.
Okay, thank you very much.
Thanks, bye.
If you like this video, then like, share and subscribe to ET Now.